Hello, everyone. Welcome to Smart Investing. I'm Albert, host of the channel. And today we have 5 stocks that we are going to be going over. These stocks are in the banking services sector, also known as the banking sector. So we're going to be going over quants, fundamentals, and technicals. So the first stock that I have for you guys is KFFB, Kentucky First Federal Bank, I believe. I'm reading off the top there. So today is October 20th, 2022. It is 5:22 p.m. and I'm on the East Coast in Florida. So we have here market cap of 58 million, 52-week high and low of spread of $2. So that's not really good. Earnings per share is at 0.19. Dividends is at 0.4. The yield is nice, but sorry, I got a fly in here or something. Earnings per share 0.9. It needs to be more than that. I'm not too crazy about that. 5-year chart looks pretty flat. Crazy about it. The 1 year also, you had spikes, very volatile. Look at all these jumps up and down. You had a really big jump in June. That was like $1 move, but it didn't hold. Sold off pretty fast, and that was it. So I do not like this chart. Moving on to the quant ratings. Highest rating was income. I do not like that strategy for this stock. So sometimes they work, sometimes they don't. But this is why we're going over it, because I make the final decision as to not the rating, but to see if I agree with it or not. They just give me a guideline, and I either agree or disagree, or strongly agree or strongly disagree, or be neutral about it and see what's going on with this stock for the ratings. Overall rating was a 2 out of a 5. So it's showing me that it's weak. I do agree with that. So the stock does need a lot of work. Earnings for the year, we have actual and estimates. It's not giving me estimates, so this doesn't even count for now. Moving on to indicators, key indicators. We want to see some annual results. ROA was 0.48%. I wish it gave me an actual number, but it's not. But then again, you can also compare it to the years previously. Return on equity, it has been about the same since last year, even though we're in a downtrending market. That's also not bad. Earnings per share, obviously it showed me the 0.19, so that is pretty low for a bank comparing to their peers. But for the stock alone, I'm not sure if that's strong enough to hold up for a $58 million market cap. So we're going to continue. Net margin's not showing me anything. The debt is at 84.14. We're going to skip to the net income and see what's going on. Okay, it's not going to show me revenue or operating income. Net income is at 1.59 million. So it is better than most years previously, but not better than the one in 2021. So that's not bad. So cash flow is the most important factor here, since we all know banks run on a lot of high debt. So 2.64 million for operating, 13 million for investing, and for financing negative around 12. So they do have leftover cash flow, and they have a decent balance sheet. Overall, I'm gonna lean towards the quants and agree that it's a weak stock. And the technicals, again, it failed on the technicals. Fundamentals are okay. If I was to rate it a 1 through 5, like giving it like the quant ratings a 1 through 5, I'd say either a 1 or 2. It's more on the weaker side. I'm not really neutral about it. The earnings have to get better. And again, I want to see banks lower their debt, because a lot of these banks, again, they're in the mid 80s for debt to the high 80s, and also in the low 90s. So if I can see a stock in the low 80s, that would be like awesome. And then obviously with positive cash flow, those I think are two main factors for a strong bank, regardless of the market cap. So for this stock, I'm going to say no, and we're going to move on to the next one. Next one is Ally Financial, ALLY. If we look at the 5 year, well, let's look at the first page, and it is a $8 billion company. Obviously, we're in a downtrend, but the spread for the 52-week high and low, that is about a $30 spread, so that is pretty good. PE ratio is at 3.6, so that is very undervalued. Dividend is at 1.2, so earnings per share is at 7.11. So from judging by the earnings per share, it looks like they can cover the dividend, but we're going to look at the income statement and their balance sheet and the debt and all that, just to make sure if they can cover their dividend, but also, cover money for expenses and not be in a negative balance for cash flow or overall, money that is coming in. So moving on to the chart. So for the first page, there's a mix of stuff here. We have a little bit of technicals. We have a little bit of the fundamentals. So this is just a little guideline for my first page. So for the chart, 5 year, the chart looks okay. It looks like it's following an overall market, like the S&P. It actually looks like the S&P. I never would have guessed, but it looks like it does follow a major index. So 5 year, it went up in 2020, and again, like I showed you, it's going down, and it's following the overall market. I'm gonna see a 1 year trend, and you just see downtrend after downtrend. It's like, it's just going down and down and down, and from there, it just doesn't look that good. So, it's hard and I could see this long term. I don't, by the chart, by the numbers on the first page, it looks okay, but by the chart, it just looks awful. So we're gonna look at some quants, see what the numbers are for that. So the quant, they have the highest rating is value, which was at 8.68. Overall rating was a 4, as we can see here. So a 4 out of 5. I'm not quite sure. I'm leaning more towards a 3. So a 3's not a bad rating, but also not a good rating. I'd say I'm neutral about it. So being neutral about it doesn't really say if I like it or not. Again, it's just showing like if it's a weak stock or neutral, or if it's strong. And then also shows if it's an opportunity to buy the stock or not. So that way you can come in at a good price. I would have liked to see more movement, even a little bit on the upside or even flat. But Ally, it looks like they're failing. And you can see here estimates are being dropped and dropped and dropped. I think their business model is really attached to auto loans. That's like one of their biggest loan procedures. They're really focused on certain loans. So again, autos is one of them. So now we want to dig into the fundamentals. So again, I'm neutral on the quants. The technicals failed. Now we want to see a little bit of the fundamentals. So ROA 1.6, so that's higher than most years. For 2021, 19%. So that's not too bad. Earnings per share was high. Debt to asset is at 90. That's really, really high compared to their peers. But overall, for the stock itself, for the past 5 years, it is lowest out of the past 5 years. So, I mean, it's a good sign, but an overall rating compared to other stocks, not so good. Net income is at 3.6 billion. Now, we want to see the balance sheet. So, 182 billion in assets, 165 billion in debt. That leaves them with 90%, slightly over 90%. So cash flow, which is really, really important for banks, 4 billion in operating, negative 11 billion in investing. That's pretty rough. So we have a difference of about 2, 3, 4, 7. And then to add on to the 7, that would be negative. We'll round this off to a 4, so that would be actually negative 11. So with that negative cash flow, and that's pretty high. That is pretty high. Negative 11. What was it? So negative 11 billion in cash flow. That's not good. The stock is at $26.26. So I'm gonna say no. And that is because they have cash flow problems. They have cash flow problems. So this is a no to that stock. Moving on to the next stock is PRK, Park National. So 5-year chart. And we're going to look at the market cap and everything else. Looking at the first page, dividend is at 4.1, earnings per share, 52-week high and low. I like that. Market cap doesn't really matter. So market cap is out of the question. Market off. 52-week high and low. That looks pretty good. PE ratio, it's fairly valued, so nothing spectacular to see. Dividend yield is at 3.17. Could be a little higher, but the reason is because this stock is not going down. Stock is at $131.22. 5-year chart on the technicals, you see it's been holding up. It dips down, been going up. Dips down, been going up. So it almost looks like to a point where it's trying to break for new highs for this stock. So from a technical standpoint, I like it. From the fundamental standpoint, I do like it as well. It hasn't dropped to new lows from 2020. So that is definitely a good sign. And then also it is above its 200 moving average. So it's definitely above the 107. So if we were to draw a line here, so we're looking at about this. And it's almost tracing the 100 moving average as well, the EMA of 100. So technicals check out. And now we're going to look at the quants and then the fundamentals. So for highest rating was the momentum at 7.04. So overall rating was a 2 out of 5. We're going to dig a little bit deeper. Momentum, so we have the volume at 23,000. Let me look at the 3-month average. So about the same, but it still could go higher. Needs to be higher than that. And then we're gonna look at the company. So are they beating expectations for their earnings? Financials, here we go. And we have here the estimate for Q3 2022. It has not been reported yet. So that actually gets reported soon. EPS estimate is 2.39. So stay tuned for that. That's coming up pretty soon. I'm not going to review it because I have other banks to do. But if you want to take a look at that, so be it. The stock looks pretty strong. So I'm going to look at some annual results. ROA is higher than the 5 previous years. ROE is higher than the last 5 years. And again, I know these are 2021 results, but again, if they remain flat, then that will still be a good sign because again, based on the price, the stock has not sold off, so that means people still like it. Debt is at 88%. Like I said, that low 80s will be fantastic. But again, I don't know if it's by law or whatever, but for some reason banks like to stay in debt, in high debt, and it's always above like 80%. I don't know why. I don't work at a bank, so if anybody knows anything about that, keeping the debts high for banks, and I don't know, so be it. Maybe it's because they can claim or reclaim, I guess certain financing, and I guess they get paid back from taxes or whatever it is, how they do it to finance stuff and get their money back. Maybe they do certain bailouts and stuff like that. But anyhow, I just don't know why so many banks are highly in debt. Net income is at 153. Well, round it off to 154 million. Revenue is not showing me. Balance sheet, again, 88%, so 9.56 in assets. Now here comes the fun part, cash flow. And can they afford that dividend? Because we're going to go over that dividend, and that dividend is pretty high. 157, higher than previous years, so negative 412. And then 103 million in financing. So that would be a difference of, so you got like what, 260, so around 140 million. So they can afford it. So with that 140, they can use that net income to support the cash flow, but then they will be left with a little bit over 10 million, slightly over 10 million. Dividends per share. We're going to look at that real quick. So this stock, wow, okay. So this stock does pay special dividends. They paid, I don't know if you guys see that here in 2019. They paid a special dividend in 2020, and they paid a special dividend in 2021. So we can see here, let me move my camera here. So we have here 96 cents in right there at 2018. Well, we want to jump to 2020 just because it was a bad year, but to begin, but then it ended up with a really, really good year. So 2020, let's close that off and see. So from here to here, it looks like they did raise the dividend by a penny. But just this amount alone quarterly, that is a hefty amount. That's a pretty good amount. That's a nice amount for a bank to give out that much. And then also the special dividend as well. So you're looking at least $4 in 2020. and plus with the special dividend, so $4 and what, 25 cents minimum. So now we want to jump to 2021 results. They paid 2 special dividends in 2021, so it looks like they're doing pretty good. And then for 2021, they made 6 payments, 2 in February and then 2 in November. And so they have $1 for the dividend and 3 cents, and then $1.03, $1.03. And so they did raise that dividend from 2020, but then you can also see from going to 2021 into 2022, they did raise it again. It's only 1 cent. I mean, but something is something. I guess just because they gave that raise just to say, oh, yeah, we gave a raise. So it's not a grand raise. I think it's just proof of statement, as I like to say. Just because you say you're giving it, and it's not a high expectation. It's just whatever we give you, they give you. So again, it's not a high amount, but it looks stable. It looks stable. I mean, they pay around the same amount. And then also the dates look like they correlate as well. So for this stock, I am going to say yes. This stock is looking good for a watch list. Watch list. Next stock up that I have is INDB. So INDB volume is pretty high. Right away I saw that. And then stock is at $80 for the price. Okay, let's see. I'm assuming they're low cap stock. So I'd say, I don't know, 2 to 5 billion, something. So okay, they are $3.7 billion market cap, 52-week high and low difference of at least $10. So we have 20 here, so that's really good. PE ratio is at 20, right off to 22. Give it that. Earnings per share, that's fine. It looks good. So dividend is at 2.04. Now we want to see if that can cover that, and and they're not paying too much in dividends, and they're overpaying, so that way they can grow the company and cover their expenses and do it is what the management team needs to do to control their money management skills. So we have here free float and shares outstanding. So not a lot of people are buying this company. So it looks like a fairly decent stock. Now we want to look at the technicals. 5-year chart looks flat to me. Obviously from 2021, it looks like it's on an uptrend. We're going to lower the time frame. Now it looks pretty flat. Within the last 3 months, for the most part, it looks like it's going down. But then from the past a month, instead of the 3 months, now it looks like it's on an uptrend. So it's honestly hard to say, because it would actually have to break and hold on to these numbers, and it's just not doing it. It goes up, goes down, goes up. It's a lot of choppiness. So I can't really tell if it's following a certain index, but again, I don't like too much choppiness. So the technicals, I'm going to say they failed. Now we're going to move on to the analysis part for the quants. Now we have the highest rating, which is momentum. So this looks like a short-term stock, maybe to day trade. That's what it's showing me. Overall rating is weak. I can agree with that. And then for momentum to pick up, I need this also as a secondary indicator to help support the stock as well. So again, if you're day trading, I'm not caring about these. I'm just caring about this and this. So again, overall rating 2 out of 5. Hopefully, it can gain some momentum and hold onto that price range, but looks like it isn't. So the quants, do I agree or disagree with that number, 2 out of 5? Not sure. Not sure. So dividends is at 51 cents. So we can see they gave a raise from 2021 into 2022. So that's pretty good. So now we have here 3-cent raise, and then from 2020 into 2021, a 2-cent raise. That checks out. So now the estimates real quick. ROA looking good. And then the debt to asset, mid 80s, very typical. And then they lowered their equity when it came to comparing it to the last 5 years. Lowered their assets compared to the last 5 years as well. Those don't look like big numbers, but I mean, from 1%, a little bit over 1% to 0.72. That adds up, guys. That adds up. So it's got to be careful with these companies. That's why to see these evaluations. So 120 million for the net income. That's pretty strong. Then we have 20 billion in assets, 17 billion in debt. Now, operating, investing, and financing. So all the cash flow, we're going to take a look at that. So we have about, let's see here, a lot of cash flow from 2021, 816, and then negative 63. So these guys have over 800 million in cash flow. So these guys definitely have been saving and putting their money away. And on top of that, the technicals do support it. So I think it really, like I've been saying earlier in the video, it just depends on cash flow. There's a lot of choppiness again, but I think over time this will smooth out. We're gonna look at the dividends once more. So did they ever have a dividend cut? I want to go back a little bit more in time. So no. Look at the splits. No splits. So for this stock, I'm going to say yes for watch list. INDB. So last stock that I have for you guys is CCNE at $23, $504 million market cap. Looking at the first page, not crazy about it, just because 52-week high and low. Earnings are okay. Dividends at 70 cents. PE showing me 7.2, so really undervalued. Technicals failed. You guys should know why. Looks flat. Hasn't been holding up. Very volatile. It's been going down. It picked up in July, mid-July, and then went up and then went right back down. It hit new highs, actually, for the month of August, mid-August, but it just sold off just like the overall indexes. So, moving on to the quants. Highest rating is quality. We want to see about that. So, we're going to investigate that right now. Overall rating was a 4. Rated it strong. Overall rating was a 4. We're going to look into that real quick. So, financials were estimated as higher for Q3, and it looks like they missed. And then also in Q4 2022, they lowered the guidance and the expectations. So we'll see about that. So they beat the first two, they missed on the third one, and we'll see for Q4. Now, ROA, we're comparing for the last 5 years. So it's about the same looking at 2021 results. Earnings per share 3.16. So the earnings have gone up a lot. So I would expect this company to be in a good position for cash flow. Now, looking at the income statement, 57 million. Okay. So that is too much debt. I'm not liking that. And then we're still gonna look at the cash flow. So 58 million, negative 409, and 550 million. So they are positive over 200 million in cash flow, but then okay, so they can support it. They do have money on the sidelines. Again, the chart looks choppy. Gonna look at the dividends. I don't know why they can't afford to give a better dividend raise. I think if they did, it might earn some interest when things get better. So that would be a good move to do. If not, then they better work on it. So for this stock, I will say yes to add to a watch list. But again, I'm not expecting it to go up this year. I think it has potential. They have money on the sidelines, so it wouldn't hurt to add this to the watch list. So that's all I have for you guys. Thanks for watching. I know the video is long. Again, stay tuned for the shorter version. And I'll see you guys in the next one.